morning. I'm Pete Najarian. This is the take on this Monday morning for Market Rebellion. You go back to last week, we had that great conference in Las Vegas. Everything was phenomenal. And thanks again for all those who attended. And hopefully you were very happy. Everybody I heard from, it seemed like, was extremely happy about what was going on. We closed out a very difficult September. We started off October. It sputtered early on Friday. And then before you knew it, things just were taken off to the races. As a matter of fact, the acceleration of the markets was pretty impressive. We recaptured and got over 34,000 in the Dow. We actually finished up on the day almost 500 points. Same sort of a story when you look at the NASDAQ. The NASDAQ had a decent, the first hour or so, a little bit more back and forth and in the red actually, before suddenly this acceleration to the upside, finishing up over 100 points to the upside. I think about 115 points to the upside, maybe even a little bit more. But what was really driving the markets, I think it was all based upon the storyline of Merck and this treatment and all those kinds of things, really did give a little bit of a kick. On top of that, you had energy. We look over at oil, and you look at oil actually approaching and getting up near and over 76. That was something else as well. Energy just continues to, almost on a daily basis, be the sector leader. Not every single day, but it feels like almost the majority of days we see energy absolutely with this explosive move to the upside. As a matter of fact, Friday, up over 3%. That's a really big move for a sector. Materials also were kicking in there as well. Financials up about 1.5%. We had great participation. Industrials up well over 1%. So when you look at the participation, it wasn't just energy. Yes, energy was leading in very strong leadership, but across the board, just a nice participation, which is something we oftentimes are looking for. Volatility was between 21 and 23. Where did we close out going into the weekend? Right around 21. Made some sense based upon everything that we were seeing, and a little bit of that nervousness, the human element that goes into that as well. All of that, when you take a look, you can understand why we sort of pushed down a little bit as they started to price in the weekend itself. And they did a pretty decent job. Matter of fact, when you look at volumes, again, and I've been up every single day at our conference, we talked about this a lot. 42.6 million contracts is what we traded on Friday. That's another absolute monstrous day. We have been just continually just building, occasionally a step back. We get into the mid 30 million area. And then before you know it, we start pushing on 40, get through 40. We'll see what happens today as we start the beginning. Well, Friday really kicked it off, but we start to get into this fourth quarter. Tesla, Apple, yep, those were your leaders early on. They were the million share option contract club, but then followed by AMC. You want to know who's number 4? Merck. The numbers there and some of the leading into that delivery of that news was extraordinarily strong. It goes back weeks and weeks. It goes back to late August when we started to see a lot of this activity. It just started to roll. We had a lot, I think 10 or 11 hits, but 3 or 4 of those were in the very, very large buying category, 16, 18, 20,000 options. And sure enough, rewarded very nicely because of this great news that had a huge effect on the markets. What do I mean by that? Cruise ships, yep, that was affected. They had a really strong day. You look over at casinos, they had a decent day. You take a look over at airlines and hotels, all having a fairly strong day. You know who did not have a very strong day on Friday was Moderna. Matter of fact, Moderna was down about 11% on this news. Just a lot of reading into what's going on and all of that with the Merck news and so forth. I'll tell you, CF Industries, we talk about materials oftentimes, and a lot of different names come up. It's oftentimes in the steel space, U.S. Steel, some of those kinds of names, Freeport, McMoran. But I'll tell you what, CF Industries, another one. That was up almost 10% on Friday. So a really, really strong move when we look over at some of the different aspects of the market that were kicking in and adding to those big numbers. So we come into today, we've already kicked off Q4 Friday. We come into today, things don't look so bad as far as the Dow's concerned. A little bit of pressure on the NASDAQ, and we've seen that before. One's up 100, one's down 100. We've seen this on many, many occasions in the past, that dislocation that we get. But as we progressed through this first hour of the day, we've watched this steady meltdown of both the NASDAQ, but also contributing to that move to the downside. We're starting to see a huge move out of the Dow. As a matter of fact, the last 20 or 30 minutes, we've dropped over 200 points. We've been mostly in positive territory for most of that first half hour or 40 minutes of the day. But then suddenly the selling pressure came on. A lot of that contribution coming from some of those NASDAQ type names that are obviously in the Dow as well. Looking over towards technology, and you see Apple, you see Microsoft, you see Salesforce, those kinds of names. Energy just continues to be that leadership role. We talk about it's almost every day. It's not every day, but it's almost every single day we see energy moving to the upside. Energy was very, very strong early. That's pulled back a little bit. Matter of fact, you take over a look at something like the financials, up over 1% early on. That's actually going into negative territory. We've seen that Dow, as I said, down 200 points. You look over at the NASDAQ, down 230, 240 points. We're starting to see an acceleration. There's no doubt about that. And you look over at the volatility index, 21, 22, that's kind of where we parked ourselves. Well, last I looked, we were back up and over 23. And as a matter of fact, I look at energy, part of the reason it's still hanging in there, you look at the price of crude, not only recapturing 77, but fast approaching 78. So this path higher just continues for energy. And we have seen incredible, absolutely incredible, unusual options activity in that entire space, both the ETFs themselves and many, many, many of those individual names, we call it in that XOP category, those beta names. They were leading early. They were absolutely explosive moves early on. Devon and Halliburton and Occidental, all those kind of names had a little bit of paper in Occidental. Moderna was under pressure again, at least early on. It was down about 7%. I just took a peek a little while ago. It was down about 5%, and Merck up about 3%. So you're seeing a little bit of that back and forth there as well. So let's get to a couple of unusuals, and then we're done for the day. I am back on the halftime report on Tuesday, not on it today, but we do have cash flow portfolio and a whole lot of other things going on. Actually, I'm going to be doing WCCO radio here in Minnesota. You're more than welcome to come in and take a look on the streaming app. They do a really, really outstanding job. Talking about a football, finance, that kind of thing, having a little bit of fun with my man, Corey Heppola. Does a great job. So, unusual option activity. Talk about it all the time. Hate having to give you guys an ETF, but the ETFs that we have seen the paper in energy have actually moved, for the most part, very, very similar to a lot of those single names. Not quite the same, but certainly when we see the option paper in there, I just want to let you know what we're seeing there. And a lot of the time, I will move to the individual names, but I do have some positions in ETFs myself at times. XLE was trading a little over 54, 54.40, something like that. Early on, it's actually hit more than one time, but the first one, highly unusual because they went out in time, and they've done this a little bit more and a little bit more in some of the energy space where it's not always just the weeklies or 2 week out or 1 month out expiration cycle. They're actually going out a little bit further, November, December, January. This happens to be the December 61 calls. They bought 20,000 XLE December 61 calls. They were going for about $1.05. They hedged those off by selling the 65 strike calls a few ticks outside of that 61. So the big buying of the 61s, selling of the 65s, reducing a little bit of the risk, also capping a little bit of that upside. It's oftentimes a very, very smart way to do things, but as we talked about at the conference all weekend, sometimes we do them, sometimes we don't. In a situation like this, I'm much more apt to go on an individual strike than actually spread it off. But everybody's got their own opinion and their risk management. GT, Goodyear Tire, this one's pretty interesting as well. Trading right around 19. And it's the only thing outside of energy, even though it's obviously attached to a lot of different parts of what energy fits into. But Goodyear Tire, 5,500. These went all the way to January, the January 19 call. So the stock's right around 19. They're buying the January 19 calls, 5,000 of those, paying about $2. That is all-time premium. These are not in the money calls. They're not necessarily, I wouldn't call them out of the money calls. Actually, these are exactly at the money calls. So somebody is buying time. They're buying time to see if Goodyear Tire is going to produce to the upside. So a lot of premium there, but you're also getting plenty of time for any kind of movement to the upside. We'll see how that plays out. Folks, have a great day of trading. I look forward to seeing you tomorrow.